Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the bearish tones improved as the Australian dollar took another challenge to the downside, has bruised the support at 71.75. Also, note as the 60-day moving average. It is assessed, though, we need further confirmation to support this break. Now, we're pretty much about 60 to 70% there to support it, but I would like that next extra 30 just to confirm that the market has broken down. So at this stage, the RSI 3-day look back has confirmed, but the MACD still at this point is showing some potential threat that the market should fall away. If so, then I'm looking down towards the region of 70.75 as a target and maybe down to 70 cents. Resistance at this stage is now seen at 72.0520. The dollar index still remaining pretty much in a bullish sentiment, therefore should see further weakness to the euro. At present, the support at 113.80 is holding, but I do expect to see that break. Now, over a period of at least a few weeks now, you can see that finally we've got the MACD breaking down along with the RSI, so therefore this should encourage further weakness. The target, though, is a little bit shallow. It's around 113.0520, where I do expect to see profit taking to come back into play. Resistance at this stage is seen at 114.35. The dollar yen at last finally broke the resistance at 108.80 and now reopens the upside to 110.20.25 as an objective. With a marriage, like I tend to talk about, is the fact that the MACD is broken over the midway point, broken away over the axis of and also the midway point of the RSI, and therefore could see further encouragement to the upside with the immediate target at present seen at 109.55, which I do expect to see a move to 110.20.25 before profit taking comes back into play. As long as we maintain above 108.45, then this supports my bullish view. The pound had a little bit of a breather last night, although in terms of Theresa May, she did survive the vote of the no confidence. Technically, though, she still has a lot of work to do to get through this recent Brexit deal rejection. It was the largest defeat for a sitting government in history. The PMs voted 432 votes against 202 to reject the deal, which sets out the term of the Brexit exit from the EU on the 29th of March. So, although Theresa May is looking to Plan B, the EU have suggested in the local press that they are prepared to extend some time to work the withdrawal out. At this stage, from the technical point though, I don't really have a strong view. The parameters are going to stage around 124 to about 130, but from a technical point though, do note that we are still a little bit bullish. So I would say that the market's still a bit short and therefore could see a little bit more of a squeeze to the upside. But the gold still not backing away from the 1,300 level. We're quite close to it now. And then from a technical point, the RSI has not broken down, but the MACD has. It is in terms that a break of 1,300 would give further scope to the upside and bring in a target of 1,350 as a potential or measured move. But wait for the break. Otherwise, if we do get a rejection, then the MACD could strengthen up and see a pullback towards the region somewhere around 80 or maybe down towards the region of 75 to 78. And round up with the oil, well, I did note yesterday that the market has displayed a head and shoulders. And from the head and shoulders, the shoulder, the head and the shoulder, the neckline comes in at 52.90. Now, a break above there would give confirmation up towards $55. But the measured move, however, is at 64.5. So do keep that in mind if you're trading. So let's see if we can get the break today. From a technical point, though, it doesn't look like it. It could fail, but I'd rather see how the market plays out and see if we do get that break. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.